Welcome to AGXM. Today's guest is a strong proponent of sound money who's been working hard to get gold and silver restored to their historic prominence. Joining AGXM today is none other than Keith Weiner, CEO of Monetary Metals and president of the Gold Standard Institute. But first, if this is your first time joining us, please go ahead and subscribe to our channels, as well as check out agxpay.com to learn how the power of modern silver money can help you claim financial freedom. And now to our interview. Keith, thank you for joining us.
Thanks for having me, Nick.
Now, you're all about unlocking the productivity of gold and have been very vocal about viewing gold and silver as money. Tell our viewers who might not be familiar with your work a bit about what you do and how you hope to achieve this.
So I started as your typical computer nerd. Dropped out of computer science school because I wanted to build a software company, which I did, and I sold it to a company you may be familiar with, Nortel Networks, August 19th of 2008. As a historical footnote, that was the last acquisition Nortel ever did because they went on to quickly go bankrupt after that. So at first that kind of felt surreal to me, but as I was watching everything collapse in the fall of 2008, I began to think this is very serious. Started to study first markets and economics and then ultimately monetary science to figure out what's going wrong, how to protect myself, and to just understand it at the root. Then I decided around that time that I wanted my next venture to be some part of the solution. It was clear that the problem was debt, and debt bred by a paper monetary system, and therefore the solution couldn't be more debt, it couldn't be more quantitative easing, as they were calling it then. It had to be gold. So I wanted to do something with gold. Came to the realization that there's only one force that is going to bring gold out of private hoards. So people tend to hoard gold. They buy the gold and then they put it away, and nobody will talk about it. Nobody even tells sometimes their kids that they have gold, and certainly not their nosy neighbors. Only one force brings gold out of private hoards and into the market where it can circulate, and that is earning interest. People bring the gold out to earn profit on it. This is a very old idea that goes back thousands of years. Lend your money and we'll pay you interest on it. Obviously, things have to be updated for a modern context. You have regulators and tax issues and things like that. So you have to design a program that makes sense and that something can get off the ground as an early stage company, which we are. So our first program for this is gold leasing. So picture every bullion dealer, every jeweler, both manufacturer, wholesaler, distributor, retailer, refiner. There's a bunch of businesses that always have gold in inventory. And every day there's a certain amount of gold that comes into the beginning of the factory, and then it goes through X number of steps. And then at the end, it's sold out as finished goods, but there's always more coming in. So it's like a pipeline that has a certain amount of gold in it at all times. And those companies need to finance the gold inventory. So the typical means of finance are either the owner's personal stash, which is great, except for the fact that it doesn't scale. And if your business is growing and you don't have any more capital, you're kind of at a dead end. Or you go to a bank and just borrow money to finance your inventory. The problem is, of course, that the price of gold can drop. And so let's say you borrow $1 million, you buy $1 million worth of gold. If the price drops 10%, you now have a $900,000 asset, but you still owe the $1 million. You're bankrupt. So by leasing the gold, the company that's getting both gets their financing and eliminates this price risk. And at the same time, that allows us to go to investors who put up the gold and pay interest on it. And investors are pretty excited about that. So they're getting gold on their gold. And so the gold comes out to market. So it's an elegant little theory that turns out it works in practice.
That's fantastic. It's actually quite similar to what AGX and the LODE project do with respects to silver. I'm curious though, you've said that the solution is not more debt. And so if you view gold and silver as real money, then what is your overall opinion on the fiat currencies that are presently existing?
Well, they began life as a deposit of gold. So you'd bring your money, gold or silver, to the bank and get a piece of paper that was a receipt that says you're entitled to get your money back. And government comes along in the United States, at least in 1790, 1790, 1792, with the Coinage Act, and says, okay, we're going to standardize the unit of deposit. So if I say I have $1 in bank A and you say you have $1 in bank B, that both banks represent the same amount of metal in that deposit. But through a process of what can only be called adulteration, they begin to tinker with this and change it and change it and change it. And today, $1 is an irredeemable credit. That is, it is a credit. It is borrowing. But unlike in 1790, it's not. You can't get paid back. It says right on the dollar bill, this this is lawful, not lawful. This is legal tender. And so it's a credit that promises never to pay, but it still works like a debt, and it still is a liability to the issuer. It still grows, and that growing debt is the scary problem that everybody's looking up, saying, "Oh my God, what is going to happen when this debt finally reaches whatever the absolute limit may be?" There is a limit; it is finite. What happens when it reaches that limit? Well, it all comes collapsing down.
Yeah, I agree. There are many people who hold the same perspective as you and are, prepping accordingly. So in your ideal scenario, how would you envision gold and silver making their comeback as real money? How would that play out for you?
So today, there are several obstacles to most mainstream people wanting to hold gold or silver, for that matter. And the first is it's mental. They're kind of psyched out. They learn from kindergarten or even earlier than that money means paper. It means paper with green ink on it. And you talk about gold, and they think of it as a risky commodity that maybe goes up, goes down. Mm-hmm. But that price risk is a real risk that people have to obviously be aware of. Second problem with gold and silver is that there's a cost. Professional traders would call it a cost of carry. But if you're going to buy one or two gold coins, you can stick it in the sock drawer at home. I imagine a lot of people do that, or in the freezer, or under the floorboards, or whatever. If you're going to put a significant amount of your wealth in metal, you can't really hold it at home. I mean, you're subject to the risk of home invasion, flood, fire, ordinary burglary, all those things. And so you have to vault it professionally, and then there's a cost. And so to the average person, A, it isn't money, B, it's some kind of investment, and then there's a cost to hold this investment. Unlike, if you do property reasonably intelligently, you're getting a rental income on that property that more than covers the cost of the mortgage and the taxes and upkeep and all those things. But gold is something that has a cost. And so I think one of the key elements in order to make this work is the cost has to be zero, or even profitable, to do so. So I can share the anecdote of our own business as a sort of example of this. When we did all of our branding and thinking and soul searching about how we're going to launch this, we said we don't want to try to sell the idea of gold to people who aren't already convinced, because that's expensive and slow. By the time we started with this in 2016, the market was already saturated with all the buy gold messages since at least 2009. And so we said, we're only going to focus on people who have gold. And our message isn't going to be why you own it. It's going to be why you should stop paying storage fees and start, earning yield on it. But what we found is that a great deal of the investment that came into our program, and still is coming into our program, is coming in the form of dollars. That is, people are buying gold in order to participate. And so even though we didn't try to focus on that segment, gold becomes a much more interesting asset when it can earn a return. And there's a very famous, or I should say infamous, quote from Warren Buffett that in a certain sense is very disingenuous, because he's trying to defend the regime of the dollar, which is really indefensible. But he says, look how bizarre this would be if you're looking down on Earth from Mars, that we pay all these guys to dig the gold out of the ground. We pay more guys to put it back in the ground and stand around guarding it. Gold has no utility, he says. It earns no yield. If you buy a lump of metal and you hold it in years, you still have the same lump of metal. It's not productive nor procreative. I forget how he put it. And he's right in the conventional sense, and that's the big obstacle.
That's a great quote from Warren Buffett. So we've spoken quite a bit about gold, but what about silver, which has a little bit more utility?
We think of silver as money also. And historically, gold and silver served slightly different functions. They're both monetary metals. They're both heavy. They're both shiny. They're both, well, gold is impervious to tarnish. Silver is a little bit tarnishable, but it's actually pretty good. It doesn't tarnish quickly or a lot. And then the tarnish builds a protective film.
Mm-hmm.
It's not like iron that'll just rust through. Um, but gold was always so valuable that I don't think most people could really afford. If you're working for wages and you want to set aside 10% of your weekly wage, today 10% of your weekly wage might be $50, $60, $75, something like that, right? And if you want to put that into savings in the form of metal, you can either have a stack of silver, that's a whole bunch of 5, 6, 7 coins of silver, or a tiny little fleck of gold that would be so small it would have to be in a little window in a little plastic credit card size thing. And obviously, gold great for large transactions, but silver great for the small saver who's accumulating while he's working and then dishoarding while he's retired. So it serves a different function, I think. And I don't think that technology has changed that. I think silver still does what silver does, and gold still does what gold does.
Well, it's true, and I think you alluded to a great point that people have a greater tendency to hold gold rather than spend it. So, as I mentioned earlier, the LODE project is also looking to restore silver as money, using blockchain technology as the vehicle to make it happen. What are your thoughts on this technology as a vehicle to reinstate precious metals to their former glory?
I think there's a natural marriage. I wrote an article, I think this was 2012 or 2013, arguing that if you had 2 crypto coins of equal, cryptology, equal technology, equal blockchain, equal utility, and one of them declared to you it was irredeemable, and the other one declared to you that it was guaranteed redeemable in a finite amount of gold. Let's call it bit gold in lowercase. And I coined that term. The folks that came out with a company called BitGold did acknowledge to me that the name came from reading that article. But the thought experiment was, which of those 2 would you rather hold? And obviously, people would rather hold the gold. So I think there's a logical marriage here. And the other thing that I think is worth saying is that the real fundamental virtue of the gold standard isn't quantity. I write a lot saying it's not about quantity of money. It's really about honesty. And we've reached a financial world today where I think a growing number of people are just questioning the integrity of financial statements, balance sheets, audits, public companies, all kinds of stuff. And I think most actors are probably reasonably honest, but the rules of the game keep shifting. Those of us that were watching with horror the events in 2008 to 2009 remember that FASB, the Financial Accounting Standards Board, in March, I think it was March of 2009, declared you no longer have to mark impaired assets to market. So if you have $1 billion asset on your books and you realize the market value of that's only 100 million, you can keep it at the $1 billion under the new rules. So what I think blockchain brings to the table is a real-time auditable. I mean, anybody can sniff around and see what you got. Look at a balance sheet or any kind of financial intermediary and understand the financial position of that player. And everybody can make their decision, do you trust this or not? It's not a blank check, which I think the major banking institutions have today. And of course, they enjoy that privilege, wouldn't want to give it up. But I think blockchain has the potential to be very disruptive in that particular way.
Yeah, I agree. And I think in many ways we're already seeing this with many major financial institutions already having full blockchain departments. One last question for you today, Keith. It's been great having you and having your insight. In some of your recent comments, you've touched on the wealth effect. What is this concept and why is it worth learning more about?
This is one of those things. There's so many ways that economists use this antiseptic terminology to, sort of gloss over the glaring moral issue. So economists have observed a statistical correlation that if the stock market is rising and properties are rising, that GDP will go up and consumers will spend more. Well, obviously, I mean, if you buy a whole bunch of stocks for 100,000 and then they're suddenly worth 250, you feel richer, so you spend more. And so in my comments, I always say the wealth effect is wealth the way pasteurized processed American cheese food is cheese, which is to say it isn't. It's just a artifact of the central bank pushing interest rates down, because the interest rate and the bond price are a seesaw. They're strict mathematical inverse, and you push the interest rate down, you push asset prices up. And so everybody feels richer. But if you look at it that way, you realize the whole thing is kind of a Ponzi scheme, in the sense that nothing real has been created. It should be obvious, and basically this is Say's law, that in order to consume, you must first produce. And yet now we're enabling consumption without first having production, by just simply driving asset prices up. And so what the central bank is doing, and I'm going to paraphrase Mises a little bit, is not teaching people the miracle of turning water into wine, but rather the much more prosaic trick of teaching them to eat the seed corn. That is, they're consuming their capital. And if there's one takeaway that I want to leave everybody with, it's this idea that everything in our system today is designed to induce people via perverse incentives to a very perverse outcome, which is to eat the seed corn and consume capital.
Wow, that's a very powerful and eloquent way to end our interview. Thank you again for joining us, Keith, and take care.
Thanks for having me, Nick.
That's all we have for today's interview with Keith Weiner, CEO of Monetary Metals. So glad that you guys can join us. And as always, if this is your first time, please go ahead and subscribe to our channel, as well as check out agxpay.com to learn how the power of modern silver money can help you claim financial freedom. Take care.